conducted by Loan Process Solution, LLC. Answers that matter. Disclaimer: the information provided in this video is for informational purposes only and is not meant to take the place of legal advice.
Hello. So glad you guys joined. We have a lot to cover today. We're going to be talking about additional income. So if you have your pens and your pads, this is a great time to go ahead and pull it out. Let's get started, okay? And I want to remind you guys, you can always put your comment in the comment box, and you can send an email to simplyaskharriet@outlook.com. Looking forward to hearing from you guys. Have a great day, and let's get started. So before we get started on our topic, I want to share with you guys, I came across some phrases about money. Let's see if you've heard of any of these. A dime a dozen. A fool and his money are soon parted. $1 million idea. Easy money. Get your money's worth. Money talks. And you know the other part of that, right? Some of you do. Money to burn. Not made of money. Put your money where your mouth is. Time is money. And then, I don't know about you guys, but I heard this a lot growing up in our household. Money don't grow on trees. I heard that a lot. Okay, so I just want to share that with you guys. By now, you should have your pens and everything ready. So let's get started. So we're going to talk about child support income. It must be court ordered. That's number one. And in order to see that it is court ordered, we would need to see a copy of the divorce decree or separation agreement, right? And so what the lender is looking for on those documents would be the amount of funds that you're getting for the child or for the children, right? As well as how long you're going to be receiving those funds. All right, so those are key. That's very important. And so the other part of that is proof of payment, right? We have to document proof of payment. And generally, the lender wants to see that you've been receiving it for at least 12 months. Right? 12 months or more, and then depending on the mortgage product that's sold to you, it could be less, but on a general basis, the majority of the lenders want to see that you have a 12-month history of receiving child support income. All right? And also the other part of that is that you've been getting it consistency. It's not sporadic, right? You've been receiving those funds on a regular basis. That's another piece that's very important, so take a note of that. So let's recap, right? So the two things that we covered so far is the child support income must be court ordered and it must be consistent. So there are times when we see that an individual is receiving more income, child support income, than what's mandated, what's required, what's documented, what's in your court order, okay, or your separation agreement. We do see that, right? But just know that if you are receiving more than what's mandated, the increased income cannot be used for to qualify you for the mortgage. And the reason is simply because it is voluntary income. That's the reason why. And the lender want to make sure that whatever income that's being used to qualify you for that mortgage is consistent and it will continue. All right. So that's the main thing. Keep that in mind. Now, other documentation, in addition to the court order or of the separation agreement or divorce decree, we'd also need to document the age of the child. So if that information is not available in those documents, you will need a copy of the birth certificate, right? And in addition to the birth certificate, you need a copy of bank statements, all right? And the bank statement will show that you're currently receiving child support. Most of the time, child support is sent to a bank account. So that's the reason for that. And also, I think we talked briefly earlier about showing a history, right? That 12-month history of receiving. That's a document that we need. As well as, I think that pretty much covered the documentation that's normally needed. And again, that all depends on the guidelines for the program that you're qualifying for, or the product that you're sold, all right? So now let's recap. So the main thing that I want you guys to know, that it's a great thing that you're getting those increases more than what's required, more than what's mandated in your court order for child support. But just know that that cannot be used because the individual that's paying you the extra funds, they're not legally responsible. And the underwriter or the lender is looking for income consistency. Voluntary income can be changed very easily at any time, so there's no real history of consistency there. All right, so that is the reason. Just make a note of that. So let's talk a little bit more about the age requirement. Okay, in most states, the age that you will receive child support is to age 18 for the most part. Most states, depending on the state, right? But the other part of that the lender's looking at is income continuance, right? Will that income continue for an additional 3 to 5 years? So the age of that child at time of application is something that's going to be really looked at, right? So just make a note of that. That's important. So in addition to you getting that income up to age 18, how long is that income going to last? That's something that the lender's going to be looking at, all right? So I just want to make a note of that. The other thing that I want you to know is these are general guidelines that we're sharing. It depends on the product that you're being sold, all right? So, but for the most part, age 18, depending on what state you're in, and also income continuance is very important. And generally that's from 3 to 5 years, depending on what product you're applying for. So now let's do a quick recap. This is a repeat. The age of the child or children matter. The age of your child or children matter. Income continuance must be documented, right? So please make a note of that. Alimony income. Alimony income is a valid source of income, and it does qualify. You can use that income to qualify for a mortgage. Okay. Alimony income is also called or considered maintenance, spousal maintenance payments or spousal support. Spousal income can only, or alimony income can only be used if it has a documented history that you've been receiving it, right? And also income consistency, income continuance is also important. So those two things, you got to show that you've been receiving it, have a history of it, and also have to show that it's going to continue. We've been talking a lot about those two things, consistency of income and continuance of income. So it's the same thing with alimony. So the lender is going to look for the court order, right? The court order is going to tell the lender more about the entitlement, right? The terms and entitlement. Terms and entitlement. Now, basically what that is how much you're going to be getting it and how long is it going to last, right? So the settlement agreement, divorce decree, any court order document would show and document that. And that's what the lender is looking for. Make a note of that. Retirement income. Retirement income is a valid source, right? You can use retirement income to qualify for a mortgage loan. Retirement accounts that can be used is a 401k, IRA, a simplified employee pension plan, or this other one that I always have a challenge pronouncing, that KEOGH account, all right? Those are different types of retirement accounts that can be used to qualify for a mortgage. So how do you document retirement income? Usually you have an award letter. Usually once a year, we're given an award letter. That letter basically outlines the income, right? And it also shows that that income is a lifetime benefit, right? That's what the lender's looking for. Income consistency is one of those categories, and that award letter will verify that that income will be or is consistent because it's going to be a lifetime benefit. So how much of the benefit can be used? Generally, lenders use only 70% of that benefit, only 70% of that retirement income. And here's an example, right? And we'll give an example a little bit later, but the idea is that the income must be stable. It's important that that income is stable. And so the award letter would show how long that income is going to last. And usually retirement income lasts a lifetime, but we would need to identify that, okay? Make a note of that. So let's talk about investment income. Investment income, all right? Basically, the type of investment income that we're talking about here that can be used for a mortgage is dividends and interest. Dividends and interest income is what we're talking about right now, all right? And basically, with investment income, you have to show that you are the owner of the account, the investment account, right? You have to document that with statements of some sort. And generally, you have to show that the income is consistent. It's going to be continuous, right? So you need to document a 2-year history, generally 2 to 3 years on average of investment income. And in order to document that, the underwriter is going to ask you, or the lender is going to ask you for for tax returns, generally 2 to 3 years worth of tax returns. And you will need all the schedules, so not just taking pages out of it. You will need the full tax returns with all the pages and the schedules, okay, for 2 to 3 years. So basically, most of the lenders will go with the 2-year average, right? So I'm going to show you an example of how that's done. Let's say in 2019, you earned $80,000 worth of interest, right, in dividends, investment income, let's call it that. And then in 2020, you earned $70,000 worth of investment income. Basically, you just add those 2 years up, and it'll give you your 2-year total. And then you're going to, once you get your total, in this example, it's 150,000, you're going to divide it by the 2 years to determine what it is annually, right? So the average annually for the last 2 years would have been 75,000. That's the annual income we're using. Now, if you want to determine what it works out to monthly, you can take that 75,000 and divide it by 12 months, and it will give you $6,250, right? So that's what the monthly investment income would be used in the example that we're using here right now, okay? And generally, the lender will use just 75% of the monthly investment income. Just 75% of that is what's going to be used. So if you take 75% of 6250, and round it up to the nearest dollar, that's $4,788. So that's how it's done to determine what the monthly investment income would be. All right. So those are the steps that you would take. Make a note of that. So let's talk about rental income. Rental income, types of properties, right, that can be used for rental income. Single family homes, multifamily homes, apartments, condominiums, mobile homes, vacation homes, and others. But in order to consider rental income, the income must be reported to IRS to be considered as rental income, right? So the way that lenders determine or calculate rental income is called market rent income. The way that it's calculated here, we're going to show you some examples, all right? So what basically you would multiply the amount of money that you get from rent by 75%, okay? And so in order to do that, let me just show you guys an example. Let's say if you're renting a house out, or any one of these types of properties, you're renting, and your rent is $1,000 a month is what you're getting for rental income. So you would take 75% of that rental income, which would bring it to $750, because the lender is only going to consider 75% of the rent that you receive, right? All right, so 75% of $1,000 will give you an allowable rental income of $750, okay? So there are some other adjustments that I want to talk to you guys about briefly, and that is even though you're getting, the lender's going to accept 75% of your rental income, other adjustments have to be made. Let's say, for example, the allowable rent is $750, but you have a mortgage, right? Let's say that you have a mortgage on that property that you're renting, and that mortgage payment is $550. And then you also have a homeowners association, let's say, for an example, right? So you would need to subtract those two numbers from your rent, the amount that you get, the adjusted rental amount, the allowable rental amount. So again, just to recap, you're getting $1,000, 75% will be allowable rental income, which brings that number to $750, but you have a mortgage, so you have to subtract that out, $550, and then you also have homeowners association of $75, so you would need to subtract that out. So the positive income, and I'm going to call it positive for right now, is $125. That's what's remaining. So in this example, $125 would be the income that can be used, the rental income, after the adjustments are made. So I just want you guys to know that after you make those adjustments, right, let's say if you have a negative, if this number was a negative opposed to a positive, if it's a negative number, we would need to subtract this number from the other income that we've documented in your file, okay? So just know that there are some adjustments made after you get your rental income. Only 75% is allowed to be used on most of the time. 75% would be the maximum allowable rental income, and then any adjustments. Now, of course, if you don't have a mortgage, then that means your positive income would be higher. But if you do have a mortgage and you have a homeowners association that you're paying on that property, those adjustments will be made accordingly. And if it's a positive number, you can add that. We can add that to your income that's being used for your qualification. If it's a negative number, we would have to subtract that from the amount of monies that you've made that we've documented in your file, okay? Now that might sound a little bit complicated, But remember, negative, subtract from your income, positive, adds to your income. Just make a note of that. Okay, these are just a few more notes about rental income. The lender is going to want to look at 2 years worth of tax returns. So make sure that you include all the pages, and all the schedules for the last 2 years tax returns. An appraisal will also be required most of the time, depending on the product, again, that you sold. But in general, on investment properties, an appraisal is usually required, right? So this is just a list of documentation that I want to share with you guys. A copy of the lease agreement. The lender would want to see a copy of that lease agreement. And as well as homeowners insurance and tax bill. And if you have a homeowners association, also a copy of that statement that would show what your monthly obligations are as well. Okay? So if you have a mortgage, I just want to put a note on here. If you have a mortgage on the property that you're renting and the homeowner's insurance is included and the tax is included, sometimes the lender will still ask you for copies of your homeowner's insurance and your tax bill, real estate tax bill for that property. All right, so just make a note of that. All right, so now we're ready to talk about bonuses and commission income. So we're going to cover bonus income first. Bonus income can be used to qualify for a mortgage. IRS classifies bonus income as supplemental income or supplemental wages. That's the way IRS classifies bonus income. But it's very straightforward the way that the lenders calculate it, all right, and the way it's done, looking at a 2-year average, and what we're trying to get to is what the monthly income is. So the way you do that, here's an example. This person earned $10,000 in 2019, and then in 2020 the person earned $12,000 worth of bonus income. So you just add the two and you get $22,000. Then you're going to take that number and divide it by 24 because there is 24 months in a 2-year period, and that will give you your monthly income, which in this example is $916. Okay. The other thing that I want to talk to you about briefly about bonus income is the income must be documented as must be confirmed that it's going to continue. All right. So just note that. Now, commission income is also a type of income that is eligible to be used for qualifying for a mortgage. And the way that's calculated is very similar to bonus income, right? We're looking at a 2-year average, we're looking to see that you've been receiving this for at least 2 to 3 years worth of commission income. But on average, most lenders look at a 2-year period. So let's look at this example of how it's calculated. All right, now this person in 2019 earned $40,000 of commission, and then in 2020 they earned $45,000 worth of worth of commission income. We're talking about commission income here, okay? So if you add the two, it comes to $85,000. You divide that by 24 months, and it will give you your monthly commission income. In this example, it's $3,542. So that will be your monthly income, all right? So I do want to bring to you guys' attention that the guidelines that we are covering, they're all general guidelines, and it may differ depending on the mortgage product that you're sold, all right? So this is just basic, just to give you an overview on what lenders look for when it comes to bonus and commission income, all right? Take a note of that. Here is a list of our topics.
Why do lenders ask for so much? Pay stubs tell more than you know. Additional income, child support, retirement, investments, rental income, bonuses, and commission. Self-employment. The application process. Budget. How to get started, and why do I need one? Common terms you should know. Bankruptcy, child support and alimony, home inspections, the loan closings. It's not all about your credit score. Freeze or fraud alert. What is the difference?
We want to hear from you. So tell us, what topics would you like for us to cover? And what topics did you enjoy best? And don't forget, share our workshops with a friend. If you have comments or questions, you can email us at simplyaskharriet@outlook.com. One of my brothers, his name is Harold. He shared something with me recently, and I would like to share with you guys. And it reads, sometimes the smallest step in the right direction ends up being the biggest step of your life. Tiptoe if you must, but make the step. Keep the dream alive.